half or just time to continue and make also effective. পরীক্ষার আগেই আমরা হয়তো মিনিমাম 3 দিন আগে ছেড়ে দিব for personal study and especially library education. That means for your preparation. সুতরাং যে ক্লাসগুলো চলছে বা চলবে এগুলো খুব তাড়াতাড়ি এবং ভালো করে আমরা দেখভাল করি এবং এই বিষয়টায় মনোযোগ দিই। Explaining and compliance, you are taking, even you are receiving a lot of information here, such as regular teachers and the government teachers, they are senior fellow member of the institute and running the profession, especially other tax বলা হয় যেমন ট্রান্সফার প্রাইসিং, তারপরে প্রফেশনাল ট্যাক্স যেগুলো এগুলো they are very good at, even in practical field, which you are receiving, I think myself, from appropriate resource persons. Value added tax, especially Rakesh Saha, in the field of practice is very renowned one, and he will be tried to the best to promote you. Please attend all the class. Babu hoyto Rakesh Babu প্রায় শেষের দিকে। I made talk upon him and he informed me that he is nearby to complete the session related tax. আর এডিশনাল যেটা সেটা হলো যে স্পেশাল I think not treatment, special care of all of you, especially the overall discussions, questionnaire discussion of our honorable Chief Executive Officer, our sir, Subhashis sir. Okay? ওই জন্য আপনারা যা পাচ্ছেন, which the proceedings or the arrangement you are receiving actually vast and very appropriate for you, I think myself. ওই জন্য মন দিয়ে সব ক্লাস করব। আর যেটা হয় যে সিনাপসিস গুলা পাশে রাখি। আমার এখানে আজান হয়, though I am Muslim and also it is required to me also stop here. আমি একটু বিরতি থাকি, একটি আজানের জবাব দেই, আজানটা শেষ হোক, এরপরে স্যারকে হ্যান্ড ওভার করে I will take my leave. আমি একটু ক্ষান্ত হচ্ছি, স্টপে যাচ্ছি প্লিজ। জি, তো যেটা বলার যে অন্যটা ক্লাস, এবং আমরা শুক্র শনিবার অলরেডি we have started physically class, so you should try to come, especially Saturday. শনিবারে যে সেশনটা রাখা, এখানে আসি, কারণ কিছু ক্লাস অবশ্যই দরকার ফিজিক্যালি এখন সিনিয়র লেভেল, and it has been taken the decision from the our board and different platform, that means body or committee, এই জন্য অল্প কিছু ক্লাস আমাদের honor before exam হবে। আপনারা as and when we also invite, you will also come to it. So thank you very much. আমার মনে হয় যে প্রায় এখন তো উইন্টার সিজন সমাগত, এই জন্য কথা না বাড়াই, যত তাড়াতাড়ি সেশন শুরু করা যায় তত ভালো। And if you need also have here the break time or the prayer time or interval হলো আধা ঘন্টা, in consulting with our respected CEO sir, আজকের গেস্ট ফ্যাকাল্টি স্যার, কথা বলে অ্যাজ ইউজুয়াল নেবেন। তাহলে আমি ক্লাস মুখী হই, সেটা হচ্ছে টুডে অলসো দ্য স্পেশাল সেশন, and it is questionnaire session and solution session. So keep your valuable synopsis, which also provided earlier, beside of you, just to go with the lectures. One second, please also make response to our today's guest faculty, that means our respected CEO sir. আজকের কথা বলতে হবে, অনলাইনের ক্লাস, সেখানে রেসপন্স না করলে সেশনটা ইফেক্টিভ হয় না, মাই ডিয়ার, and also the brothers and sisters. তো এই জন্য আপনারা কথা বলবেন, কথা না বললে হবে না। Especially I also request our captains who are responsible here to make conversations upon the consequent and also the point of views, that means asking and discussions in the class. এই গেল। আর এমনি আব্দুল্লাহ আলী আব্দুল্লাহ, তারপরে আমাদের গোলাম ইমতাজুল ইসলাম, নাবিলা, কথাবার্তা বলবো আমরা। আর আমি স্যারকে মনে হয় হ্যান্ড ওভার করি। নেয়ার অ্যাবাউট 36 36 জনের মতো মনে হয় চলে আসছে, ছাত্র আরো আসবে, তো ক্লাস শুরু করি। আর সিনপসিসটা কাছে রাখি, আর যেভাবে বললাম এভাবে, and I will come again and talk to you other issues even as required for your suggestions, to arrange the implement and make the betterment for all of you and also the effective sessions. আবার আসবো, কথা হবে, ওকে? তাহলে I just to move to hand over this session to our topmost respected আমাদের শ্রদ্ধ সিও স্যারের বরাবরে আমি শামিল হচ্ছি। প্লিজ অ্যাটেনশন এবং কথাবার্তা বলি সে আলোকে। আবার স্যার, আই এম ইউর হালিম স্যার, and also request here to come and just to start your valuable session. স্যার, আসা যাবে এবং ক্লাস শুরু করা যাবে। আমি হালিম বলছি স্যার, আসা যাবে প্লিজ। মামন,
স্যার স্যার আসছে স্যার। স্যার আদাব।
আদাব স্যার। শুরু করা যাবে স্যার, কাইন্ডলি স্টার্ট and also permission to leave. তাহলে ছাত্ররা আমি বিদায় নেই, আর আমাদের অভিভাবক সামনে মন দিয়ে ক্লাস করি। আমি বিদায় নিলাম স্যার, আদাব আদাব।
So good evening to everybody. Welcome to this session. I believe I had one session with you before. Since you are from the professional level, can you remember what we discussed in the previous class? If you can remember what we discussed in the previous class, we can refer to some of the problems we discussed. And I believe not all the issues were discussed in the same class because some were left unattended. But we can discuss the new handout which has been handed over to you for this class. I hope that with the progression of the issues in this handout, we will be able to discuss other issues as well. So if you have the handout with you, you can open it and we can discuss one by one. The number one problem, what we put in the handout is that Mr. X is a businessman who submitted a return under Section 75, showing an income of Taka 50 lakh for the assessment year 2021 and 2022. Afterwards, he found out that the income was not correct for the income year. He had some other sources of income, like from fisheries. His income of fisheries stood at Taka 25 lakh. So he decided to revise the return showing the income from the fisheries sector. So he submitted to the Deputy Commissioner of Taxes a revised return under Section 78. The Deputy Commissioner of Taxes did not accept the income of fisheries as exempted. Let us suppose that the income from fisheries is exempted or at a reduced rate. We suppose it. So he added that income to the total income, and the total income stood at 85 lakh. So what should be the application of this income of the SSC? What suggestion would you give the SSC? So it is assumed that you are a practicing chartered accountant and you are providing consultancy service to the SSCs, and the SSC has come to you with some problems. And the problem you have seen here that the SSC submitted a return showing some income. And afterwards, he thought that he has made a mistake by not showing income from fisheries. And we assume that this fisheries income is at a reduced rate or exempted, whatever it is. So he decided to submit the return afresh. That means a revised return. And you know that the revised return has to be submitted under Section 78. Whenever the original return is submitted under Section 75, it is within the tax day. And afterwards, if you want to submit the return correcting the income you showed earlier, should be under the revised return. So the SSC submitted the return under Section 78, and the return was totally changed from that in the original return. So what was the return now? It included some income from fisheries, and we have assumed that the fisheries income is exempted or it is at a reduced rate. So earlier, the income was shown at 50 lakhs. Now the SSC has shown the income at 75 lakhs. But 25 lakh taka which arose from the fisheries income has been shown to be exempted. But afterwards, when the return was submitted to the Deputy Commissioner of Taxes, he did not accept the income as exempted, although it is exempted or it is at a reduced rate, whatever it is. This is assumption. And the Deputy Commissioner of Taxes computed the total income of the SSC at taka 85 lakh. So it means that the SSC showed his income at taka 75 lakh, and out of that, taka 25 lakh was exempted as per the claim of the SSC, and it is assumed. But again, the Deputy Commissioner of Taxes has raised the income to taka 85 lakhs. That means the shown income was not accepted by the Deputy Commissioner of Taxes, rather it was enhanced by taka 10 lakh. So that was the assessment made by the Deputy Commissioner of Taxes, and the SSC, after receiving the IT 88, that means the assessment order, along with the demand notice, he came to you in order to seek redress to his problem. So since you are a practicing chartered accountant now, and you also provide consultancy to SSCs on income tax matters, you have to advise him accordingly. That is the question which you have to answer in the answer script. So any suggestion from your side? First of all, you have to decide whether the SSC can submit a revised return under section 76 or not, 78 or not. So there is always a provision that you can submit a revised return if you find any mistake in the original return submitted by you earlier to that. So in this case also, the SSC found out mistake. That means he did not show income from fisheries. And we have assumed here that the fisheries income is at a reduced rate or at an exempted rate. So he changed his return and submitted the return under section 78. Income from business maybe 50 lakhs, normal business, and taka 25 lakhs from the fisheries sector income. And afterwards, the Deputy Commissioner of Taxes accepted it, but accepted the return, but he did not accept the income. So what he did, he actually calculated the income at 85 lakhs and taxed the income from fisheries. That means he raised the income by 10 lakh taka and then he taxed it. So the SSC was aggrieved after receipt of the assessment order from the Deputy Commissioner of Taxes and came to you for redress. Now what you will do? Whether the DCT was right in doing the assessment, making the assessment in such a way, that means when he calculated the income at 85 lakhs, whether it was okay or not. First of all, you have to decide like that. So here, section 1931 has to be taken into account. What is section 1931? Section 1931 says that whenever you have got an income from exempted source or at a reduced rate, and if you do not show it in the original return you submit to the Deputy Commissioner of Taxes, in that case, in the revised return, you cannot claim that income is exempted or at a reduced rate. That is the provision. So whenever you are showing exempted income or income at reduced rate in the revised return, then that would not be treated as exempted or income at reduced rate. That will be treated as normal income and it will be taxed accordingly. So in this case, the DCT did not accept it and he was right in doing it. But at the same time, what he did, he actually raised the income by 10 lakh, and that was the point of dispute, of course. And of course, the exempted income, which was not accepted by the Deputy Commissioner of Taxes, that was also point of dispute. So here, what the DCT did was right in terms of not accepting the income from fisheries. But again, when the DCT raised the income by 10 lakh, that could be contested. And if you are a chartered accountant and represent the SSC, you can advise him to prefer an appeal to the Appellate Joint Commissioner of Taxes or Appellate Additional Commissioner of Taxes in order to redress the problem. That means the points could be raised like this: the enhancement of income by 10 lakh, it is not justified because no ground has been pressed by the Deputy Commissioner of Taxes, and that's why he was not justified in raising or enhancing the income by 10 lakh. So it could be reduced. And if it is as per previous record, that means the income that was determined or calculated by the Deputy Commissioner of Taxes for the SSC in the previous year, and if the calculated income was less than this year's income or equal to this year's income, in that case, it could be accepted by the Appellate Joint Commissioner of Taxes or Appellate Additional Commissioner of Taxes. So in that case, this assessment could be contested before the Appellate Tribunal, before the Appellate Joint Commissioner of Taxes or Appellate Additional Commissioner of Taxes. And that is the redress. And here you see paragraph 33 of part A of the 6th schedule. This has to be taken into account as well, because under this paragraph, that is part A of the 6th schedule, and if you go through the paragraph 33, it means that you have got some source of income from different sectors which are actually exempted from tax. So if the income is exempted from tax or it is at a reduced rate, in that case, in the revised return, this cannot be shown as exempted. It should have been shown in the original return as exempted. In that case, the Deputy Commissioner of Taxes would have given you the benefit of this section. But here, if you do not show it, then you cannot get the benefit. So that is the understanding of this section. Let us move to the next question, next issue. Number 2, XYZ is a private limited company which has got a capital of 5 crores. The company earned an income of 50 lakhs for the income year 20. The company felt the necessity of buying 2 jeeps from the Prabhuti Limited for company's operational activity and official use. The company had an accumulated reserve of 50 lakhs. The cost of 2 jeeps was 1 crore 40 lakhs, that is 70 lakhs each. What should be the treatment of this transaction from the perspective of income tax by Deputy Commissioner of Taxes? What should be the income of the company for the assessment year 2021-2022? Assume that the tax rate of the company is 45%. What should be the calculation of tax by the Deputy Commissioner of Taxes? So this is a restriction on the purchase of jeeps or cars by a company. And the intention of this section is to put a restraint on the expenditure to be incurred by the company in purchase of very costly cars. The company is not supposed to buy very costly cars or jeeps, and that's why a restriction has been imposed on the purchase of the cars. So it has been said that the company has got a paid up capital, a capital of 5 crores. Its capital is 5 crores. And the company earned an income of 50 lakhs for the income year 2020-2021. The company felt the necessity of buying 2 jeeps from the Pragati Limited for company's operational activity and official use. And it has got an accumulated reserve of 50 lakhs. And again, we see that the cost of each jeep should be 70 lakhs. And 2 jeeps would cost the company 1 crore 40 lakh. Now, what should be the treatment? And this capital is treated as paid up capital, and paid up capital plus accumulated reserve. And it should be 5 crore. That should be paid up accumulated reserve. So %10 of the cost of the jeep or car, you have to find out first, what does it stand? Here, you might have some confusion with regard to the calculation of the price of the jeep or car. And there is, of course, a verification from the National Board of Revenue in 2011 that the calculation for the amount is to be calculated for each car or each jeep, something like that. But the provision, that is section 1927, if you go to that section, you will see that it has been said that for any car or jeep, something like that. Language is like this, for any car or jeep. So it does not indicate that it has to be, the amount has to be calculated or determined on the basis of each car. So I can say that this has to be calculated with the cost price of 2 cars together, because the language is faulty. Any car or any jeep has been mentioned there in that section. So if I want to mean, or if we want to mean that an individual car's cost has to be taken into account, in that case, the language should have been changed. And the language should be for an individual car or jeep. So in that case, each car has to be taken into account. So this language is faulty, and that's why it always creates a confusion, although clarification has been given by the National Board of Revenue. But you can follow the clarification that has been given by the National Board of Revenue for the sake of answering the question according to clarification. So what does it indicate? That 10% of the paid up capital plus the accumulated reserve, which is 5 crores 50 lakhs, and 10% is 55 lakhs. So if the cost of the jeep, that is 70 lakhs, exceeds 10% of the paid up capital plus the accumulated reserve, by how much? It is exceeding 70 lakhs minus 55 lakhs. That means 15 lakhs each car. So if it exceeds by 15 lakh, in that case, 50% of the exceeded amount shall be treated as income from other source of the company. But if you consider the faulty language, the total cost of the 2 chips is 1 crore 40 lakhs, and 10% of the paid up capital plus accumulated reserve is 55 lakhs. So difference between the two is 85 lakhs. And in that case, 50% of 85 lakhs, that means 42 lakhs 50,000. That has to be taken into account as the income from other source under section 33, read with section 1927. So the Deputy Commissioner of Taxes in the assessment order would write that this is an income arising out of section 33, which should be read with section 1927, and it will be assessed to tax. So this is something which we can discuss here. Confusion can arise. And in my opinion, the language of that section has to be changed. But if you can follow the clarification made by the National Board of Revenue, that you can do, but language should be correct. Let us go to problem number 3. Mr. A started business in respect of export of ready-made garments in the year 1985-1986. He was given a quota by Export Promotion Bureau of Bangladesh to export garments worth $1 lakh US. However, in the course of operations, he faced some problems and sold out 50% of the quota to somebody else. But he showed an income amounting to 0 in his return for the concerned year. So what would be the calculation of income in the assessment order to be framed by the Deputy Commissioner of Taxes? So this problem has been set for the assessment year 1985-86. Or it could be for the income year 1985-86, because he started business in export of ready-made garments in the year 1985-86. Let us suppose that this is the income year. And he was given a quota by the Export Promotion Bureau of Bangladesh. And you know that Export Promotion Bureau is under the Ministry of Commerce. And this is the national organization which actually promotes export from Bangladesh. So it is the only national organization for promoting export before the world community or before the global market. So the problem is not in existence now, because this kind of problem is no longer found in Bangladesh. It's because ready-made garment you can export to other countries of the world at any quantity as per your capacity. But once upon a time, this was not possible for the companies to export ready-made garments to the global market. Because that time, the developed world, they did not allow the least developed countries to export their ready-made garments to their countries in any quantity, because they did not want to eliminate their companies producing ready-made garments. They wanted to eliminate their companies in phases. And that's why they actually introduced a quota to be allocated among the least developed countries of the world. So allocated the quota to the least developed countries, meaning that the quota was distributed among the least developed countries. So maybe, say for example, quota was 100. 100 means the value of ready-made garments under 100 quota was something else. And this 100 quota were allocated among the least developed countries, maybe 25 countries, for example. So 100 quota was allocated among 25 countries. That means each country got 4 quotas. So if a particular country gets 4 quotas, it means that the country would distribute the quotas among the ready-made garments exporters. So the country would decide which companies will be given that quota. And it also depended on the capacity of the companies exporting the ready-made garments. So the country or the authority of the government decided that 4 companies or 10 companies would be given quota. And the quotas were allocated among the companies. But when quota was allocated among the companies, it was found out sometime that 1 company or 2 companies or maybe a number of companies were not able to supply the ready-made garments to the global market. Not possible because of some reasons maybe. So maybe because of lack of fabrics, or because of necessary workforce, or because of lack of some other overhead expenditure, etc., etc. So the company was not able to export the quotas to the global market, meaning that as per quota, there were some value mentioned to it or attached to it. The value is, it has been mentioned here. What is the value? 1 quota was given to the businessman, Mr. X, and it was worth $1 lakh US. That means the quota given to Mr. X was worth $1 lakh US. But what was found out later on is that Mr. X could not export the $1 lakh US worth of goods or ready-made garments to the global market. Rather, he sold out 50% of the quota. That means $1 lakh US. Out of that, 50,000 US dollar value was actually transferred to other company. So what happened? When he transferred the quota to another company, the Deputy Commissioner of Taxes would be able to tax him on the value of the exportable product or value of export to the global market. And for that, 3% income would have been assessed to tax. So here, if it was 50,000 US dollar, in that case, 3% of that amount would be treated as income from business, which the SSC handed over to somebody else. He did not he did not export the ready-made garments. Rather, he handed over the quota to another person in order to enable him to export the ready-made garments. So income which he handed over, that means the quota he handed over, and the value of the quota, that was 50,000 US dollar, and out of that 3% income would have been charged to tax by the Deputy Commissioner of Taxes in case of the ready-made garments manufacturer. And this is you have to consult section 1923. In that section, it has been said about the handover of the export quota from one person to another person, and the inclusion of the income to be calculated from the quota in the total income of the SSC. So here, it was a case long time ago. Case means this provision was in existence long time ago. But why is it still in existence? What are the reasons lying behind it? And that is a valid question. You can ask me that question, why this provision has still in existence. This is a very good question that you can ask me, because somebody might have handed over the quota to another person in 1980s. But he would have thought that since I have handed over the quota to another person, it is not my responsibility to show a return having some income. You can think of that. But if it comes to the knowledge of the Deputy Commissioner of Taxes that Mr. X, a ready-made garments manufacturer in Dhaka City, he received a quota from the Export Promotion Bureau of Bangladesh, and the quota was valued at Dhaka $1 lakh US, and the full amount was transferred to anybody, or 50% of the amount was transferred to anybody. In this case, he would be assessed to tax by the Deputy Commissioner of Taxes even today, because whenever he did not show his income in the return, and it comes to the knowledge of the Deputy Commissioner of Taxes, it means that the Deputy Commissioner of Taxes can issue a notice under Section 93 asking the concerned ready-made garments manufacturer to submit the return showing proper income or appropriate income or real income. So depends on the information that has to be communicated to the Deputy Commissioner of Taxes, and he can act on that by issuing a notice under Section 93. So if the Deputy Commissioner of Taxes issues the notice under Section 93 now, asking for submitting a return for the assessment year 1985-86, he can do it. It's not a problem, because the SSC was not assessed that time. So that's why this provision should be here in the Income Tax Ordinance 1984, enabling the Deputy Commissioners of Taxes to ask for returns from people who did not submit the returns that time, or who actually escaped exporting ready-made garments because of some reasons. Okay, so here you have to keep in mind that this is necessary. If somebody has concealed income by not showing the income in the return and by not submitting the return in the appropriate assessment year, in that case, the DCT will be able to issue a notice under Section 93 asking for return from the SSC. And in that case, he can assess the assessment even of that period, 1985-86. So here another subject matter you have to know, why quota was distributed by the government. The quota was distributed by the government because, as I said to you, that the developed countries did not allow any quantity of ready-made garments to be exported to their countries because of the impact on the ready-made garment industries in their countries. And the developed countries that time, they introduced one law, which was called the Clothing and Textile Act 1974. As per that law, the phasing out of the ready-made garments industries in developed countries was determined. And that's why the quota system was introduced and the least developed countries were given quotas, and they could export ready-made garments within the quota given by appropriate authority of the government. So beyond the quota, they could not export their products to the European market or developed world market. And hence, this was very unique that time. But in 2005, this system was abolished. That means in 2005, the WTO, the World Trade Organization, they allowed the least developed countries to export their export their ready-made garments to the developed countries as well as the global market. So there was no bar to the quantity of exports from the least developed countries to the developed world or developing world. So that's why that was the reason why quota system was introduced. And afterwards in 2005, when quota system was withdrawn, in that case, all the least developed countries could export their products in any quantity to the developed and developing world. But the thing is that even it was withdrawn, but still then there were some conditions like the value addition criterion. They should have added some value to their product. That means, how did you manufacture the product? Whether you manufacture the product from your soil or not. Because the ingredients of the ready-made garments is mainly the fabric, and the fabric has to be procured from the local land or from other countries, but it depends what type of fabric you want to explore, you want to procure. So it depends on that. And if you buy the fabrics from another country, the value addition should be at least 30% in order to get the benefit of duty-free, quota-free market access. So the developed world actually gave duty-free, quota-free market access to the least developed countries, and that was the reason of competitiveness of the products exported from developing world or least developed world. That was the reason. And since Bangladeshi manufacturers or exporters who used to export their products to the European Union, say, for example, the importers of the European Union got the products from Bangladesh at a very moderate price. And in that case, the importers did not have to pay the import duty on the products imported from Bangladesh. So it means that the product became competitive since it did not have to pay any import duty, which was actually 12.5% in the European Union countries, and the importers did not have to pay the import duty. That's why their products were competitive and they could sell the products at a lower price. And it also helped the consumers, meaning that the consumers got the products at a lower price. So that was the reason why quota system was introduced by the developed world, and it was given to the least developed countries, and how it was withdrawn in 2005. But it was introduced in 1974. You should keep it in mind. Okay. Then you go to question number 4. Can the loan or advance given to a shareholder by the company in return of an advance conferred on the company by the shareholder, redeemed as dividend in the hands of the shareholder. So what is said here is that a loan or advance was given to a shareholder by the company. Why? Because once the shareholder also gave an advance to the company, and the company needed money, and the shareholder paid that money to the company. Now, if the company gives money or pays money to the shareholder, whether that money should be treated as dividend in the hands of that SSC, that means in the hands of the shareholder, that is the main question. So we can refer it to a High Court case, and it is Calcutta High Court case, and the name of the case is Pradeep Kumar Malhotra. So what the High Court held, the High Court held that advance given to the SSC was not in the matter of a gratuitous advance, meaning that the advance given by the company to the shareholder was not gratuitous. That means was not in exchange of some other considerations. It was in exchange of some other considerations, because it has been said that the SSC gave the company an advance before. That means once upon a time, the shareholder or the SSC, he gave an advance to the company. So when the company gave the advance to the shareholder or the SSC, it was not of gratuitous nature. Instead, it was given to protect the interest of the company. But it has been said that the company gave it in the interest of protecting its benefit, meaning that the company gave that amount to the SSC in order to protect its interest. Interest means maybe in future, the company would be able to receive some money as loan from the shareholder. So working on that viewpoint, the company said that this should not be given as advance, which could be treated as dividend. So High Court also held in that way. High Court said that in the course of operations, it faced some problems. High Court said that the said advance cannot be treated as deemed dividend, and it was actually not given in a gratuitous nature. So that's why it was given by the company in order to protect the interest of it. And you can refer to that case, Pradeep Kumar Malhotra, Calcutta High Court. Next issue we can go to. Would the provisions of deemed income be attracted in respect of financial transactions entered into the normal course of business? So this is just part of a problem or part of a case study, but the case study is like this. I'm just explaining it to you. And the case study is a company which was responsible for booking some resorts on behalf of the customers. And say, for example, this is a touring company, and it organizes some tours, etc., books resorts, books safaris, etc. as well. And the bookings were made by the touring company. For that reason, the touring company used to get some money from the hotels, maybe, because in order to book the resorts, it had to pay some advance money. And how did he get the advance money? How did the company get the advance money? It's from the advances received from hotels, where the people who are booked, people who are living. And when this touring company was booking the resorts, etc., it used to receive some money as advance from the hotels, and afterwards it paid to the resorts. So it was just a normal course of business for the touring company. So it cannot be said that it has received an advance from the hotels where the people were staying, and it could be treated as dividend. It cannot be treated as dividend, rather it should be treated as normal course of business operations. So the court case is Ambassador Travels Private Limited, Delhi High Court. That was a case for Ambassador Travels Private Limited, and the verdict was given by Delhi High Court, whether this advance money could be treated as dividend or not. So the High Court held that it cannot be treated as dividend because that was part of the normal activities, and it was very necessary for the touring company to book the resorts by paying an advance amount. So that's why the advance amount was to be obtained by the touring company from the hotels on whose behalf it was working. Okay. Then let us come to the point number 6, whether income of an SSC can be estimated without any basis. When the income is to be estimated, that is the first question. If the SSC submits the return and shows income from business, maybe, and afterwards he does not produce any voucher, receipt, sales book, daily register, purchase book, stock register, etc. If he does not produce them, that means produce the books of accounts. In that case, the version or accounts version of the SSC cannot be accepted. Sometimes you will see that a piece of paper is given to the Deputy Commissioner of Taxes stating that this is the income statement of the SSC, or this is the trading account and profit and loss account of the SSC. So if you just write down that your sales is like this, 5 crores taka, your purchase is 3 crores taka, etc., you can write. But what are the evidences that you need to obtain from the SSC? Whenever the SSC says that my sale is 5 crores, he has got the responsibility or obligation to prove it. Otherwise, you can say that no, it was not 5 crores taka, rather it was 10 crores taka. So how to prove it? The SSC will produce vouchers, receipts, sales book, journals, ledgers, trial balance, balance sheet, etc. Everything has to be produced by the SSC before the Deputy Commissioner of Taxes in order to prove that his sale was 5 crores in all for one income year. So whenever the DCT asks for the vouchers or receipts or daily register, etc., the SSC has to support him, has to provide the documents that would be needed by the Deputy Commissioner of Taxes. So if he issues a notice asking the SSC to appear before him in order to explain the version of his accounts, he will definitely ask for details of the accounts. And he can actually find out one purchaser of his products. And cross-verify whether goods have been sold to that buyer. And it will depend on the basis of the books of accounts maintained by both the persons, and another would be the bank statement to be given by the SSC or concerned SSC. And if it has received, if the SSC has received 5 crores taka from the sale of his products to 1, 2, 3, 4, or 5 buyers, that could be proved. And taka would have been deposited into the bank account. So other books of accounts would have been maintained by the SSC. And in that case, you would have accepted it. So when your sale is not vouched and verifiable, when your purchase is not vouched and verifiable, and when your stock book has not been maintained, in that case, you can estimate the sale. And on the basis of the gross profit, that is the percentage of gross profit, you can arrive at the amount of gross profit. Or you can do it on the basis of the previous record. So previous record you can consult and you can see what gross profit was actually calculated or determined in the previous year. So if you find that, okay, the gross profit was estimated at 20% of sale in the previous years, in that case, you can also do the same in this year. But books of accounts have to be produced before you, and supporting vouchers, receipts, etc. should have to be produced before you. If it is not produced before you, in that case, of course, you can raise the income level, you can raise the sales level, and you can estimate what would be the sale. Although the submitted version cannot be accepted by you, rather you can say that, okay, this amount of sale is to be accepted by me because it is supported by the previous records. So if it is supported by the previous records, then it is okay. And again, in some cases, you reject books of accounts partially. That means you can say that, okay, the sale is vouched and verifiable, stock book has been maintained, and purchase is not just vouched and verifiable fully. So in that case, what you can do, you can just estimate a percentage of the sale which has been shown at a figure for inflationary purpose. That means whenever you think that the purchase has not been fully vouched and verifiable, in that case it is very logical on your part to think that the purchase could have been inflated. That means the purchase was not actually the correct figure, but it was an inflated figure. So if you think like that, or if you have some proofs. Some proofs means whenever you think that this will not be reflecting the true purchase of the goods. In that case, you can estimate a certain percentage, maybe 5%, 6%, or 7% as the inflationary rate by which the company actually stays enhanced. So what is the purpose of showing our valued purchase? You can show an inflated figure as purchase. It means that the gross profit would be reduced by that amount. So that's why you can estimate an amount which is 5%, 6%, or 7% as inflation. Inflation could be added to your gross profit. So that way you can estimate the sale. But you cannot do it without any basis. You should accept some of the procedures which you earlier adopted in this file. And again, if you receive a version of accounts from the SSC wherein everything has been bounced and verifiable, but only sales is not fully bounced and verifiable. Purchase is bounced and verifiable. Sales book has been maintained, but sales is not fully bounced and verifiable, but stock book has also been maintained. So in that case, you have got an option to do. And here also you cannot reject the version of accounts. Rather, what you can do is that you can arrive at sale, which is as per the recognized or accepted gross profit rate. So maybe you are saying that the gross profit has been estimated at 20%, or the SSC has shown the gross profit at 20% for this account. But earlier, it was 22% or it was 25%, which has been reflected from the file. And what can you do now? Whenever you see that everything is bounced and verifiable, but only sales is not fully bounced and verifiable, in that case, what you can do, you can calculate the figure. Figure means you calculate the cost of goods sold. Here, what is the cost of goods sold? And a desired GP rate, that is the GP which you want to apply here because of the faults. That means lack of some vouchers, lack of some receipts, etc. So if you see that the shown GP is 20%, and the figure is maybe 50 lakhs taka, the figure of GP is 50 lakhs taka, and you can calculate the cost of goods sold. That means sales minus GP shown, that is the cost of goods sold. And you have to divide it by 100% minus desired GP rate. 100% minus desired GP rate means 100 minus 25% if it is the record of the file. So if you see that the GP rate was accepted or adopted at 25% in the past, in that case, this will be 75%. That means 100% minus 25%. And then you divide the cost of goods sold by 75%. Then you will find a figure, which is of course a figure of sale. And there should be a difference between the shown sale and that sale. And the difference money would be added to profit. So this is a formula actually adopted by Mr. Tandeka, who was a chartered accountant based in Mumbai, India, long time ago, and he introduced that formula. So that way you can also estimate. So the question is whether you can estimate the income of an assessee without any basis. You cannot estimate the income of an assessee without any basis. Rather, you should base on some points which have got some value, which has got some reasons, which has got some arguments. So in that case, you can answer this question that without any basis, we cannot estimate the income of an assessee. Rather, we have to depend on some basis. And then the next point, whether opportunity should be given to the assessee to explain his position when the DCT wants to enhance the declared income. Yes, the assessee has to be given some opportunity. Otherwise, he cannot explain his position. And the declared income of the assessee, if the DCT wants to enhance, he has to be given an opportunity to appear before him with documents or evidences on which basis his declared income was calculated or determined. So the assessee would produce before him the necessary papers, evidences, etc., on whose basis he calculated the income. And again, he declared it later on. So the Deputy Commissioner of Taxes has to issue notice under Section 79 and under Section 83(1) in order to assist the assessee produce the papers on whose basis he calculated his income. And if the accounts are produced before him or evidences are produced before him, like the bank statement or other statements or cash book or cash flow statement, whatever they are, in that case, the DCT should state everything in the assessment order. And he has to write the reasons why he has rejected the books of accounts. If he does not write that I have gone through the books of accounts, I have examined them, I have seen the vouchers, then he has to write which vouchers were not correct and which receipts were not correct or which receipts were fake, or the bank statement which was produced before the Deputy Commissioner of Taxes, whether it showed everything what was reflected in the books of accounts. So if it was not so, in that case, the DCT has got the reason to estimate the sale or to enhance the income, because then he will go for increasing the income. That means he will say that whatever income has been shown is not acceptable to me because of the following reasons. And now I estimate the sale because the assessee has got a track record of estimated sale or accepted sale of Taka so-and-so. Maybe the sale was estimated in the previous year at Taka 10 crores. And the year before it was 8 crores. And the year before it was 7 crores, something like that. So if there is a trend like that, the city can estimate the sale this year as well on the basis of the previous record. And if it was decided by the appellate authority or tribunal in the previous years, that could be treated as a base. That means the tribunal could have estimated sale at a certain figure, and it should be accepted by the department. That means the Deputy Commissioner of Taxes. You know that the tribunal order that is given by the tribunal has to be complied with by the Deputy Commissioner of Taxes. But the department cannot prefer an appeal against the order given by the tribunal if it is related to fact. So when sale is estimated at a certain figure by the tribunal, it has to be accepted by the Deputy Commissioner of Taxes because this is a factual issue. And since this is a factual issue, it cannot contest this figure in the High Court, division of the Supreme Court. Not possible. So that's why it has to be accepted by the Deputy Commissioner of Taxes. And if it is accepted by the Deputy Commissioner of Taxes this year, maybe for the next few years, he can actually treat this figure as a basis. That means the sale was at Taka so-and-so in such year, and the business is being continued. And there is no reason why the position of the business will be deteriorated. So in that case, it could be estimated by the Deputy Commissioner of Taxes which amount of money would be treated as income from the sale. So that is the reason why the DCT how the DCT should proceed with the enhancement of the income. And what the DCT can also do, they can also get an inspection report from the Inspector of Taxes of his circle. And the inspector could be sent to the place of in order to calculate the income of some days, maybe on a random basis. Inspector can go to the place of business and see how many customers have come to the business house in 1 hour's time, or maybe 2 hours time. What is the average number of customers coming to that shop, and what was the amount of purchase by the customers? So maybe the inspector can go to that place of business for a number of days in order to come to a conclusion what would be the income of the SSC, or what would be the sale of the SSC. And if he can calculate the sale of the business, in that case, he would be able to calculate the income. That is also possible because there are previous records with regard to calculation of GP and NP. So that's why this is the best way of doing it. So if the DCT adopts this procedure in calculating income, in that case, his calculation of income or the assessment will not be actually distorted. So it will be more or less accepted by the appellate authority or tribunal, whatever it is, even if the SSC goes to the tribunal at the final stage. Okay. Next issue should be SSC neither legal or beneficial owner of a property, whether capital gain can be imposed in his hands for exchange of that property with another property. So it was also a case study here. And the thing is that SSC was not the legal owner of the property, but he was disposing of the property maybe on behalf of his father, but he was supposed to be the owner of that property later on. And he did not get the name mutated, or he did not get the property mutated in his name. Rather, what he did, he actually exchanged the property with another property. And in that case, he gained some money as a capital gain. So whether this was to be taxed as per legal provision of section 31 or not, we have to consider section 32 as well. And the capital gain has to be calculated under section 31. But there are some provisions that whenever you are selling off a property and again you are buying a property within 1 year's time or within 2 years' time, some provisions are like that. So maybe section 32(5), if you sell a property and again you can buy a property within 1 year's time, in that case you will have some exemption. So if you do it, you will definitely be entitled to some exemptions. But if you do not do it, in that case, you will have to pay taxes. That means capital gain taxes under section 31 on the income arising out of the exchange of the property or sale of the property. So if you exchange the property, it is also like sale. And in that case, also you can calculate the capital gain tax. And if you sell it properly or in the appropriate manner, you can do it. That is also the same thing. So if I exchange it with a property, exchange my property with another property, yes, capital gain tax could be calculated because sale could be estimated. Although money was not actually given or received between the two parties, rather the property was exchanged. And in that case, the sale price could be estimated at a certain figure, and also the acquisition value should have been there or should also be estimated if it is not recorded for some reason or other. So in that case, the capital gain could be estimated, it could be calculated in my case, and as well as it could be estimated in the case of the another person. That means with whom I have exchanged the property. So in his case also, the sale price could have been estimated, and the acquisition price, if it was not there, could have been estimated as well. And in that case, capital gain tax would have been determined. So that is the way how it should be done. So doesn't matter whether you get the money in cash form or not, but even if it is an exchange, you can attract the capital gain tax. Next question, whether family expenses of an SSC can be estimated without behind his back. Family expenditure of an SSC can be estimated behind his back. So what do you think? Should the Deputy Commissioner of Taxes estimate the family expenditure of an SSC behind his back, that means in his absence, or not? As we know that the calculation of family expenditure is very necessary for the individual taxpayers, because the individual taxpayers are to submit 12 statements when they have an income of a certain level. So in the income statement, they do not mention about their expenditure. That means family expenditure. Rather, when they submit the statement of assets and liabilities, or IT 10B, in that case, they mention about the expenditure they are incurring for their family. So they have to mention the number of members of his family, and has to mention the expenditure, that is the living expenditure, conveyance expenditure, educational expenditure, food expenditure, etc., etc. So the expenditure has to be shown. And sometimes the SSC can segregate the expenditure. How much for food, how much for conveyance, how much for educational expense, etc. So what could be done? It has to show, the SSC has to show the expenditure in the wealth statement of the SSC for a concerned year, meaning that you have to show the assets or properties you have, even cash, bank, etc. Everything has to be shown in the asset or property side, and later on you have to show the liabilities you are owing to somebody. That means whenever you have taken loan from the bank, yes, that has to be shown in the liability side. Or if you have received a loan or advance from your friend or relative or anybody else, in that case, you can also show it in the liability side. So what you are doing here, you are just calculating the net wealth by deducting the liability from the asset you have. So that is the net worth, net assets. And you have to compare the net asset with this year with the net asset of the previous year. So there should be a difference between the two. If there is a difference between the two, and if you add the expenditure you have incurred this year, in that case, you will find a figure which has to be covered by the total income of the SSC. So if his total income, which he has shown in the return, is equal to the amount of the net worth, the difference between the two net worths and the expenditure, in that case, he does not have to give an explanation to the Deputy Commissioner of Taxes. Rather, he can just settle his case without any problem. But whenever there is a difference, that means the two net worths, the difference between the net worths plus the expenditure, if it is not covered by the total income, in that case, the SSC has to explain the reason why it is not equal to that figure, or how he got that amount, whether he has taken a loan from any person concerned, or he has taken a gift from his spouse or from his relatives, etc. So everything he has to declare. So the Deputy Commissioner of Taxes, he cannot say that, okay, you have shown your expenditure at 2,40,000 this year, I estimate it at 10 lakh. It is not possible, because if the DCT wants to do that, he has to explore the incomes the SSC has got, or the explore the possibility of finding out the expenses the SSC has incurred during the year. So, for example, if the SSC is found to have spent an amount of 50 lakhs on the occasion of the marriage ceremony of his daughter, in that case, the city should have valid reason to ask for an explanation from the SSC how he spent that amount, whether that amount is within the income he has shown in the return or not, or if it is beyond that income. In that case, he should ask for an explanation how he got that amount, whether he received any loan or any gift money or any advance, whatever it is. So in that way, he should be given an opportunity. So without giving an opportunity, the city cannot estimate the expenditure. It could be like this. The SSC could be dependent on his parents. He does not have to spend his own money for his livelihood. So in that case, what he would say that, okay, I am dependent on my parents. Although I have got my income, but I do not spend that income. I do not require to spend that money for my own purposes because my parents are spending money for me. So that's why I actually abstain from spending the money. So that is the reason why the DCT should ask for an explanation, or why the DCT should not enhance the income of the SSC without giving him an opportunity to explain it. So in that case, what would happen? The SSC should be given an opportunity and he should be heard by the Deputy Commissioner of Taxes. In that case, if the reasons are valid or if the reasons are well argumented, in that case, the DCT should accept it. Otherwise, the SSC would prefer an appeal. And in that case, the DCT should lose in the tribunal or in the hearing of the appeals by the appellate joint commissioner or appellate additional commissioner. In that case, the SSC would actually win the case and the department will lose. So that's why whenever an income has to be estimated or income has to be estimated, due consideration has to be given to the causes or the reasons that could be cited by the SSC concerned. Here also, the Deputy Commissioner of Taxes should do one thing. If the SSC seems to have shown an expenditure which is not actually appropriate for him, or if the size of the family is big, or the children of the SSC are studying in different schools, maybe in English medium schools. So if the DCT finds that the expenditure shown by the SSC is not proper, because he is supposed to incur an expenditure which is much more than what he has shown, in that case, he can get an inspection report. That means the inspector could be sent to his place in order to study his family expenditure. The children who are studying in the English medium schools, it's very easy to calculate the expenditure of the English medium schools. The structure of salary in the English medium school is high, of course. Coaching fees are high. So other expenditures relating to expenditure could also be estimated very easily. So the Inspector of Taxes can send a report or can make a report to the Deputy Commissioner of Taxes, highlighting the points that are very necessary for considering the expenditure of the SSC. And if the SSC is a member of a club, say for example, he is a member of the Dhaka Club Limited or Gulshan Club Limited, in that case, he has of course got an expenditure area. And if he goes to the club for a number of days in a month, in that case also he has to incur an expenditure, which is very handsome, of course. So that could also be calculated in that way. And that is the best way of doing it, because whenever the DCT thinks that the expenditure shown by the SSC is not the true reflection of his expenditure. In that case, he is to get a report framed by the inspector of concerning various aspects of his family life. And if he travels abroad, so for example, the SSC travels abroad with his family every year. So if he goes to Turkey or if he goes to the USA or the European Union for 1 month or 2 months, etc., in that case, of course, he can estimate an expenditure, which is very likely to be incurred by the SSC. And with that, the expenditure for the family of an SSC could be estimated. And due consideration, what I want to say is that due consideration has to be given in estimating the expenditure. Without giving due consideration or without giving an opportunity to the SSC of being heard before estimating the expenditure would not be legal. So in that case, the decision has to be very calculated in doing okay. So any questions so far? If not, we can take a break for some moments, maybe 12 to 15 minutes, and afterwards we again resume.